It's going to be a review over July the 8th. Coming into the day, pretty big gap down. On one hand, the odds are you're going to go sideways and get to the moving average, but this gap's so big that there's the small chance. Everybody wants. Let me put it this way: it's easy to think that you're going to get a rally that just goes straight up, and it's easy to be hopeful there. And while that is more likely than just going a lot further down, the most common and most likely things that we go sideways to the moving average. And what that means is that it's not going to be as easy as everybody wants. So if you buy above this bar, you really want to see something like this. So odds are maybe 20-25% chance it's the low of the day. Couldn't trigger, so it's a warning. A lot of bulls tried to buy 50% pullback. You can tell because, let me try to get this where it's working right. You can tell because of that reason right there. So again, it's an okay stop to buy above, stop below, but probably won't go that far. And look what happens. So here you couldn't even trigger. So if you buy here, you put a stop above that bar, it doesn't get filled, and you get another leg down. And so breakout below bar 1, follow through, odds are you'll have a little bit more down. Very far away from the moving average. The odds are we're probably going to go above these highs. And we'll probably have to in order to get closer to the moving average. But we can go a lot further down, and the moving average can get sucked down quickly before we go up. Big outside up bar. A lot of traders, they'll see a bar like bar 1. They'll buy the close, put a stop, measure, move down, and buy more at the low. And a lot of traders do that. Some traders will buy more lower, or they wait and see the follow through, and it's not a huge bear bar, so they just buy. Remember on the open, very common to get reversals. So reversal up, really we went down, reversed up, and went up, reversed down, went down, reversed up. Will bulls buy above this bar? They certainly can, but the risk is big, and you have to wonder, why did this happen? Okay, buy, but I think bulls will be quick to get out if they don't get what they want. Stop above. So it triggers, and then you get this move right here. A lot of bulls will probably be disappointed. Some will just look to get out at break even, and you can see it's not really letting them get out at break even, and it keeps going down. So far you've had a reversal up, reversal down, reversal up, and reversal down again. And it's telling you that this is a breakout mode situation, but may not have enough bars. We're trying to get close to the moving average, but we're not getting there. So another situation, will traders buy above here, stop below? They can, but look what happened over here and over here. And this one, now you've got a triangle, 1, 2, 3, 1, 2, 3. It's breakout mode, so it means it's closer to 50-50 that you're going to go one way versus the other. If you sell and stop, I wouldn't sell here too much. They're too likely that we're going to go up to here, but we could certainly go down further before we get there. If you sell, stop above, low probability. A lot of traders will get out when this happens, and you can see now we're going outside up. So triangle, 1, 2, 3. Arguably we're trying to break above the triangle, maybe trying to pull back a little. It doesn't really matter. Triangles. If you're selling on stops, if you're buying on stops, buying above bars, selling on stops below bars, it's a losing situation in this. It's just getting tighter and tighter, and eventually there's going to be a breakout, but you don't want to buy above every bar and sell below every bar and rack up a huge loss that you can't make back before the end of the day. So again, I wouldn't do anything here. Maybe you could buy here. The risk is small. You can call it 2 pushes down. So here's the triangle. Let me kind of go back. Tried to break above it, went below. We're trying to break above it again. So maybe it's a 2-legged pullback from the start of this triangle. I wouldn't even call it that. It's just a triangle that's getting tighter and tighter. It's a small stop entry, so the risk is small. And if the probability is 50-50, you really want the risk to be small. So bulls can buy, stop below, and you can see what happened. Breakout bar, very small follow through. Really, they need to get above the moving average, but so far, enough of a surprise that this probably not a double top, and we're going to get a measure move down. So probably an okay buy. 3 consecutive bull bars. Outside up, broke above the moving average. Probably will have to get to this low. So certainly okay to stay long. More consecutive bull bars. And, starting to get climactic, parabolic, first leg, pullback, second leg, pullback, third leg. But we're still going higher. And, at some point, you have to question how much further up we're going to go. So, break below this, you can call it climactic, parabolic wedge, 1, pause, 2, pause, 3, or maybe 1, pause, 2, pause, 3. Doesn't really matter. It's consecutive bi-climaxes. And we're probably going to start to go sideways soon, and we may have a relatively deep pullback. Trading range, breakout, maybe we go sideways and get another trading range. Maybe we have to test back down to here. High 1 buy, but again, pretty high up, probably will get closer to the moving average. Some traders will sell up here. They may look to sell, X number of points above. Maybe they sell above that high 1. I'm not saying that's a great thing to do. You also have, I'll leave it with that. Tested the high close. May find some sellers up here. Went a little bit higher. Still channeling up. You can call it a micro wedge. 1, 2, 3. Either way, the range is very tight. So although I'm saying you may go sideways, I'm not suggesting that traders sell on a stop below and put a stop above. If you're selling here, your risk is really small. You're probably going to lose money. It's not an easy trade, and you may have to scale in. And when you're getting this much buying pressure, it's just not a good idea. So breaking towards the moving average, but we may form a double bottom with these lows down here. So what's important right here is what's the follow through bar going to look like? You have a breakout at the moving average. Are we going to find buyers or more sellers? And we found buyers. So bulls are probably going to look to buy. The bulls buying here, they know that price could go lower. So they're buying using, most of them would buy and use a really wide stop and be confident in their ability to scale lower. Still didn't trigger. Again, buying here, fairly tight trading range from ever since over here. Not a great buy, but probably okay to buy and scale in. A lot of traders are buying the closes of bear bars. They buy here, buy for a scalp, they buy, maybe they buy more lower, get out at a new high. Big bear bar, they buy, look to take profits, maybe above the high of this bar. And you can see we're starting to sell off. 3, maybe you can argue it's a wedge. 1, 2, 3. So here's the first push, here's the second, here's the third. Often in a channel, the reversal or the pullback starts before. You can call it a failed breakout below double bottom. Really doesn't matter, but as strong as this looks, it's not strong enough to make it always in short. When you see this, you're also, at some point you're going to get close to a 50% pullback, which we may have to get to. We may have to fall and test these lows. So we could fall lower. And, again, this is probably strong enough selling that we may have to go sideways for a little bit. And you can see right there. So we tried to form a double bottom, but too many bear bars, and we went outside down. But what are traders going to do right here? Is this the start of a bear trend, or is this some sort of sell climax, exhaustion, or a sell vacuum, test of support? Maybe yesterday's low, 50% pullback of this rally, or the highs of the initial trading range. And small bear bar. So a little bit of follow through. May get a little bit more down, but probably not much lower. And we're pausing. So now it's, you're starting to get consecutive sell climaxes here, pause, maybe a sell climax here, pause. We could easily get a small second leg down, but probably not much lower. Outside up, but again, pretty tight channel. May have to get some sort of minor reversal, so test up and then test back down and form a double bottom. We broke below the low, but are we going to find sellers or buyers? Starting to form a wedge. First push, pause, second push, pause, and a third push. And starting to go sideways at support. Pretty much a 50% pullback from these lows almost exact. And now we have another, now we're starting to form a nested wedge. So first push, pause, second push, pause, third push, and then 3 pushes down, 1, 2, 3. It's also expanding triangle, 1, pause, 2, pause, 3. So 3 pushes up, 3 pushes down. Either way, trader's going to start buying, but probably enough damage. So I don't know if we'll get back to the high of the day. It's also pretty late in the day that we may just go sideways. And you can see it's pretty much what we started doing into the end of the day. Okay, so overall with the day, as strong as this rally was, you can't forget that it's after a really big gap down. And traders are going to remember that, and they're going to see this being some sort of pullback, 50% pullback to a second leg down. And so you have to be careful there. So in terms of always in, you know, you have to be careful with always in on a day like today, because what's easy to do is, and this is why it's important to buy on stops, but what's easy to do is to buy the close, put a stop below, you get stopped out, buy the close, stop below, you get stopped out, and those 2 losses alone that's quite a bit. I mean, you're looking at, let me put it like this. Let me just do this. So let's just say that's 10 points. I mean, it's not even accurate, but you're down about 20 points just initially after these 2 losses right here. So even if you buy here and you avoid a loss, you know, you buy this close, stop down here. So let's say you're in at 98. You need to get to 18 in order just to break even. So there's pretty much 18. So if you buy here and you buy here and you get stopped out, even if you bought there and you get out at 18, you're really just going to break even the rest of the day. And this is the easiest part of the entire move. So you have to be really careful when the bars are really big and you're getting a lot of overlap. It's just so easy to get chewed up. In terms of always in, probably better to buy on a stop entry. You don't get filled. You know, maybe you buy here, and this is one of those instances where you have to wonder what's going on. You know, maybe you get out below this bar. I don't know. It's not easy, and it's forcing you to buy high in the range, so it's not really a great buy. And do you buy here? I mean, you can, but a lot of bear bars, and start to find resistance. It may just be better to wait for some sort of breakout of the initial range. And that's the difficult thing about these, is a lot of times you can buy here and make money. And you can buy something like this and make money. You can buy the close and, you know, instead of waiting to buy above the bar, you can buy the close, stop below, and at least make enough money, or be able to make money and avoid a loss. So kind of like right here, you buy above this bar, get another leg, it pauses, and you have time to get out around break even. Or, you know, let me find another example. You buy above this bar, 3 pushes down, 1, 2, 3, double bottom, you buy here, follow through, but then it starts to pause and then it sells off and you can get out. So you have to be very quick, and it's easier if you wait for some sign of strength. So, you know, maybe you start to moving average, you buy the close, and, you know, no reason to get out yet, stops probably down here. And then you get this, and this, and this. Keep going up. Maybe you get out below that bar here, where you wait for, you know, 3 consecutive bear bars. You know, you could get out here even. So it's tricky in a trading range, because it's not as clear as everyone wants it to be. And when you get a lot of this on the open, traders become a little more leery of seeing a strong move like this, that continues for the rest of the day. Therefore, traders will be willing to scale in. So they may sell this high, sell down here. Maybe they sell here and they scale in, below this bar. So they sell this high during this breakout because they've been able to sell and scale in all the way. So they sell here during this breakout, sell more here. And you can see they're able to get out. Maybe they were willing to sell here and sell below this bar. And you can see they were able to get out of break even. So that's why a lot of times that happens. Traders will sell and they'll scale in. So not really all that exciting of a day. Again, if I was long, maybe you get out here, maybe you stay long, not enough bar sideways, and then at some point here, you probably need to get out somewhere. And then we just went sideways for the rest of the day. So, hope this video helps.